Okay, so today I'm going to give you the 2022 real estate investor predictions that I have. I just want to preface this by saying I'm not big on putting out predictions and whatnot, but I get asked often enough that I thought I would just kind of record just what I'm seeing based on conversations that I'm having. Last week I was playing hockey with a group of about 20 uh, developers, investors, tenant rep, all in the world of commercial real estate. And what's interesting is after these games, you kind of sit around and talk, and it was just really interesting to hear the different perspectives based on where people were investing and what they were seeing. So here's a little bit about my own thoughts. Hopefully, you can't hear my dog barking upstairs. I imagine that's the Amazon guy dropping off something. All right. So, number one is I'm big on multifamily rentals and specifically lower density built to rent. And what do I mean by that? If you're following me on Instagram, then you've seen my townhouse project. I've got another one that we just removed conditions on to build 60 of them. So I'm going heavier into lower density townhouse projects. Okay. Now, that doesn't mean that you couldn't do single family. Just so happens that the land prices for us really require us to do townhomes. All right. Here's a little bit of why I like towns as an example. First is, just so you know, I'm looking off screen just to make sure I'm catching everything on my notes. Number one, renters, they want more space. They like separate entrances. Generally speaking, these are individuals that choose to rent, not have to rent, okay, which means that they can pay more. They take better care, and you can increase rents over time. The other reason, and this was something I mentioned to my business partner on the construction side of things, and that is it's getting more and more expensive to build. And specifically here in Calgary, I'm seeing people moving here. So jobs are being created, which means you've got demand going up and supply either staying steady or even decreasing depending on the type of, or depending on where you're getting your information. And I think it's only going to get more challenging, right? There are a lot of projects that are on hold right now from developers that we're speaking to because they just have uncertainty on really on getting materials. I think that is one of the biggest challenges. And then certainly on the labor side, that's also an obstacle. Okay, so just a couple things to think about. Now this ties into number two, and number two is industrial. And I would say probably in 2020, 2021, you saw a lot of last mile, right? So this is like industrial that essentially is, uh-oh, I don't want that to, I was updating. Hopefully that's not going to screw anything up. The 2020, 2021, what I saw anyways was kind of a decline in retail, and you would see more last mile industrial. But what I'm now focused on, even though I'm not necessarily building this, but I mean, if you had deep enough pockets and you were a developer, I'd be looking at logistics and distribution. And I've had several conversations with groups that are, I'll give you a good example. So I was talking to a project manager not long ago, and he is building a 500,000 square foot distribution, industrial distribution. And they needed to order rigid insulation. And the only way that they could secure and fix their prices was to actually take possession, but they didn't need it for 8 months. So they would literally need to find a place to store and warehouse that insulation that was going to take up probably 20 to 30,000 square feet. And so I think you're going to start to see people, developers, builders, businesses, companies that really need or want certainty as it relates to materials that they're procuring and where are they going to store that. So for me, that really comes down to kind of how do I put this? Well, what I put here is customers have less confidence in global supply chain, and so they're pushing for more local manufacturers. And I can tell you that is certainly how we are looking at it as a builder right now, saying, okay, let's list all of the materials that we need. lumber, glass, concrete, floors, appliances, garage doors, you name it. Where are they coming from? And how confident, right? And I'm gonna get into this actually. I wasn't necessarily going to, but I think it's important enough. I'm gonna talk about risk mitigation at the end. All right. The third asset class that I like for 2022 is service-based retail. And I've been continuing to do service-based retail. And what I mean by service-based retail is, gas stations, QSRs or quick service restaurants, essentially where you need to go and there is a service-based component, a lube shop, right? You can't, at least as far as I know, people aren't coming to your house to do an oil change, right? People aren't coming to your house to fuel up your vehicle. Obviously, if you have a Tesla, that's a different story. But just as an aside, just Google, go on Twitter and look at some of Elon Musk's most recent tweets as it relates to oil and gas. It was quite interesting. He essentially tweeted out something to the effect that even though he knew it was going to hurt Tesla, he appreciated the importance of, fossil fuels, at least for the near term future. So I don't know why I shared that, but I thought my buddy who's in oil and gas sent it to me, and I thought it was kind of interesting. So on the service-based retail, I'll give you a quick example. So I recently just started going back to the gym, and I right behind this wall is where my gym is, and I would say that when I went back maybe a month ago, it was like a ghost town, no one in there. Today, I would say you would not, you wouldn't be able to tell, aside from the fact that maybe 10 to 20% of the people are still wearing masks, that there was ever a pandemic that essentially shut the gym down for 2 years, right? So I think people are craving to get back out, to go back to how life used to be. And I'm just going to make this as a preface all this by saying this is just what I'm seeing. Okay, this doesn't mean it's true. This doesn't mean that a lot of this is intuitive and based on conversations that I'm having. So take it and use it however you will. Now, what I would say is, and this kind of ties into the kind of next phase, if you will, of this podcast or video, depending on where you're watching it or listening to it, and that is, how do you mitigate the risk? Okay, so we talked about the three different asset classes where I think in 2022 and probably for the next couple of years they will continue to improve, and that is, lower density rentals, i.e. townhomes or built to rent. Number two is industrial, and that'll be distribution and logistics. And then number three is service-based retail. All right. Now, how do you actually mitigate some of the risk? Risk generally comes in two formats, and I just want to give credit to where I've got this. So this book is fabulous, The Road Less Stupid by Keith Cunningham. I probably have listened to it several times, read the book. This book itself, I think in Canada at least, it cost me almost $70 to get, but it's worth it's worth it. So the two risks are, number one, something happened that I didn't expect. Okay, let's call that COVID. Number two is something I thought was going to happen that didn't happen. Okay, so for example, I thought I was going to get a gym tenant in at $35 a foot. COVID hits, and now that tenant goes away. All right, and maybe that's not the best example, but I'm just kind of coming up with that on the fly. So you got the two risks: something happened that I didn't expect, something I expected to happen didn't happen. Okay, maybe a better one would be, I expected to get $2,000 a month in rents. I actually got $1,900. What is that going to do? Okay, now there's three moving parts as it relates to risk. Okay, what is the probability that will happen? Okay, number two is, what is the magnitude or what is the cost? And number three is, what is the influence, or how can I influence or change what would potentially happen? Okay, so you've got the two risks, then you got the three factors that influence it. And I think whenever or at least when I'm looking at deals, like I literally had 4 opportunities sent to me last week, and I ran through this analysis, and it helps me to get clarity and to evaluate like really what it is that I want to focus on. What I would say is one of the challenges for new investors is they confuse probability with possibility. And frankly, almost anything is possible, right? Like it's possible you could win the lotto. It's not very probable. And so often when I hear new investors and they throw out these like black swan events, yeah, look, it's possible, but you can literally talk yourself out of any single deal talking about what is possible. What I think is more accurate is to say what is probable, and then based on that probability, what is the percentage that it's going to happen? What is the magnitude if it does happen? And then what control or influence do I have over that if it does occur? Okay, so I'll give you a good example here based on one of the developments that I have. And these are just some of the things that I hear from investors. Okay, so Shane, what happens if interest rates go up? What happens if oil prices go down or go up? What happens if demand, and demand to me is people looking to rent or buy, and a lot of that comes from immigration. What happens if it goes up? What happens if it goes down? Some of the unknowns could be, what are the soil conditions? Okay, so if, for example, on that, how do we mitigate it? Well, we get a geotech. What happens if construction costs go up by 25%? Sure, I mean that is probable, and how do we influence it? How do we control it? What happens if there's a material delay that we didn't expect, right? What happens if we thought we were going to have, appliances in, or LVP that comes in at a certain price and doesn't, or gets, stuck at the border, or never makes it actually into Canada? What happens if we have labor shortages? These are all, things that could happen, or we expected to happen but didn't happen. And then based on each one of those, let's just take interest rates, for example. What is the probability that interest rates are going to go up? I would say that that's very high. In fact, in our underwriting, we are usually underwriting at about 1 to 1.5% higher than what the prevailing rates are today. What is the cost of that? Well, we can run different sensitivity analysis to see what would happen if interest rates actually do go up. And then how can you control, or what is the influence that you can have? And in our case, we're talking to our brokers right now, and this is something that is a little more advanced, but you could say, how can I forward fix my interest rates? Meaning, how can I lock interest rates out into the future? And how much is that going to cost me so that I can start to mitigate some of those risks? So that's really what I thought I would share with you. These are kind of the 2022 real estate opportunities that I'm seeing, and then some of the ways that I'm thinking about mitigating that risk. So as always, if you have questions, thoughts, comments, concerns that you think would be helpful for me to share, please either comment below or send me an email. Happy to have them on the show if I get enough feedback. So that's it. Have a great day. Bye for now.